I don't know how much the public will see it, but I do think that banks like JP Morgan and Citigroup and Goldman Sachs, they're all taking note, and they're probably going back to the drawing board and looking and saying, okay, do we need to protect ourselves? How do we kind of plug any holes? And let's keep a really close eye, keep scanning for any of these breakages in the system. Things like this may not immediately impact Bitcoin. I do believe that the more instability globally, especially in the banking system, the more it pushes people to accept an alternative currency, something like a Bitcoin. I mean, just think about all these people that are being affected in China and aren't able to get their money out of the banks. Think about some of them may not even have heard of Bitcoin before, or maybe just passingly had heard of it. And now they're starting to say, listen, how do I avoid this in the future? Let me invest some of my money in Bitcoin. So this is one of those things where short term, I don't think it has a major impact on Bitcoin. We're not seeing Bitcoin rip higher today, but it's just these little pinpricks in the financial system that is the building blocks for Bitcoin. And listen, let's be clear on this. We are in a new era, at least in recent history, where the Fed is now, the markets don't even believe yet that the Fed won't be able to come rescue us again. They're still in that kind of fantasy land. And so the economy is still kind of trudging along. Everything will be okay. And just think about this. If the Fed can't rescue us, or let's say they can only do minimal support because of inflation being elevated. And yes, I've been talking about CPI numbers coming down, but let's not kid ourselves. They're not going back to 2% or sub 2%. They'll probably stabilize at 4 to 5%. How do you print trillions and trillions of dollars when you already have a 4 to 5% handle, even with unemployment spiking to, let's say, 10%? And so you can't, how does the Fed rescue us going forward? They have a dual mandate, but when both situations, when you have high unemployment and you also have high inflation, or at least 5% inflation, what do you end up doing? Where's the silver bullet coming out of that gun? I don't know. And this is the one caveat here, is that you basically, I often think that the Fed has pulled forward an immense amount of upside in the markets for the last 10 plus years due to stimulus and just printing of money. And it's almost like you have to now have an under trend period where you could see, I wouldn't be surprised if the stock market doesn't reach new all-time highs for like 10 years. You could be in this kind of lower situation, just like the tech bubble, right? If you look back at the tech bubble, the NASDAQ didn't hit new all-time highs till I think 2014, 2015 from 2000. People just need to remember that there's always a bull market somewhere. So even if I'm bearish on the overall stock market in the next year or two or many years, there's always areas. You just have to find them. Whether it's gold, whether it's cryptocurrency when it finally bottoms out, whether it's the Asian market. You just don't know. But my goal is to let people know that there's no reason to despair. You just have to do a little bit more homework to find out where that bull market is. Look at the chart here. You can see that basically where it stopped was kind of these little pivot points right here and right here. So it makes sense that price was going to hit some resistance there. I think also a discounted factor of Bitcoin is the US dollar, and the US dollar screaming higher certainly doesn't help. Now, how much it hurts, that's up in the air, but it certainly isn't like a helpful hand in lifting Bitcoin up. I think if the dollar is topping, like I'm thinking in the next couple of weeks, and we see the dollar start to come down, that could be the catalyst for a move up and a break above this near-term 21.822 level, where we do get that move up to this 25.5 level. So you're absolutely right. From last week when we talked, I was looking for potential upside to 25.5. I think we are a little higher than we were last week when we talked, but I think for the most part, you're just hovering in this wedge pattern. Look for a break here, and then you should get that move up to 25.5. Now, I will say, if we break the lower trend line, that would start to be concerning for me. Then you have to start looking for potentially a retest of 17.5 down here. But right now, this little range here, it's getting tighter and tighter. I would say within the next 5 days, we've got to assume Bitcoin will get squeezed out, or one way or the other, either a breakout or a breakdown. My analysis, my probabilities are still favoring the upside to 25.5. I have two kinds of trades going. One is a swing trade where I'm just trying to play like the breakout, and I'll be looking to take profits at 25.5, and then maybe the next resistance, the rest of it off the table. What you're referring to, Paul, is where I'm looking to accumulate a longer investment strategy or a longer position. And basically what I'm doing is I'm using the technicals coupled with kind of the fear index, right? So I love seeing kind of massive fear and panic in the Bitcoin market. It usually denotes at least a short-term low. And then also looking at the chart, it's about where are the technical levels telling us it's going to go. So if we flip over to the chart here, the reason I bought my first one, which was at 19,000, was just simply that it was now, we had just pierced the 2017 high right here, which was around 19.5. So I picked up just 1/6 of what I wanted to own or what I planned to accumulate. I strongly encourage this tactic because ultimately it saves people a lot of stress. When you go all in at a particular level, it seems very painful when it just drops another few $1,000s or whatever, and you might get swung out. One of the keys about investing is to not allow emotion to make the decision. Every decision you make as an investor or a trader should be based on facts, chart facts, whatever it may be, on-chain analysis. But emotion, when you go all in, emotion is going to be a lot higher. So what I do is I'm very cognizant of the fact, and I've traded for 20 years, where when my first buy, it's the odds of that being the exact low are very low. So I picked up my first buy at 19, and I'll basically buy every 2,000 to 3,000 down, which will let me buy all the way down sub 10,000 if it gets there. I don't know if it will get there, but I always like to add on the side of caution. I would rather own less Bitcoin and have been cautious and protected my capital than own it all and risk being out of the money and having to stop myself out. So the idea here is every 2,000 to 3,000 down, I'm just going to buy another 1/6 position, allowing me to have a total of 6 total positions that I accumulate. And then my goal here is I see Bitcoin longer term at 200, 300, 500, even $1 million. And that's where I plan to hold that position.